Hello my fellow freedom builders and welcome back to the channel. Now, about a month ago I made a video where a lot of you have requested a sequel to that because I made a video where I showed you some tests I had of a swing trading portfolio in the smaller term stocks with a market cap between $200 million and $2 billion. And I was trying my short-term swing trading on a portfolio where I used leverage with 2 to 1, meaning that I could use my own money and then an extra time the same amount that I borrowed from my broker. Now, this month we are up 8%, and that is what many of you have requested. How has it fared this month where the market has been a lot more volatile? As you can see here, the S&P 500, we started here back in September, went down, went up, went down, went up. So it has been a difficult market for many investors, and not just you, but also me, because I am normally a swing trader, and in these sorts of swings where we are getting down 7%, and then from a bottom down here we get up something like 10%, and we just start to get some buy signals, and then we get killed here again and get sell signals. And this is definitely one of the hardest environments for for trend followers like me. So it is interesting to see how a bit shorter term swing trading strategy can do here. Now, what I'm just for a quick thing, many of you have asked, what about the red arrows here? Now, this is a timing strategy or a timing method that I'm using with my subscribers, where we are marking where we think the market is about to turn. And that has been quite well up until now, but let's see how it works in the month ahead. Now, the S&P 500 has been doing, what has that been doing the last month here? From October 15th, where I made my last video here, and up until now, the S&P 500 is up around 4.5%. So when we're looking at our portfolio here, we can see that when we made the last video, we were up around 32% on the leveraged, around 16% non-leveraged here. And then we took a downturn with the market. And I mentioned that in my last video, that when we are working with these, first of all, small cap, very small cap, micro cap companies, and we are working with leverage, that means, I think I said last time, that this 32% could easily get down to 15 or 20% if we had a downturn in the market, not in our favor. And that is exactly what happened. Now, I haven't recorded every single day because I was simply swamped with work, but we were down here at 16.4%, and it was actually down a bit more. I think it was down 14%, but I didn't track it probably just these days, and then it started to crawl back up. And as you can see, as of yesterday, we were up almost 43%, but since I'm going from the 15th to the 15th, or as close as possible, we are taking this one here at just around 40% from just around 32%. That is approximately 8% in this month, and around 4% on the non-leverage. So you can see the graph here. It should have been a bit deeper down here and then a bit more detail on the upside, but I hope you get the picture here. Remember, I'm not doing this with my actual real money right now. I have a couple of these positions myself on a little demo account, or with real money, but just trying it out. But I do not have all of these stocks. Also, I should mention that there's no trading costs here to the broker. They are not included. I'm simply testing this out. So this is not a real portfolio with real money, and this is absolutely not trading advice. But let's have a look at them. By the way, when we look at this one, you can see that we have all the grays here are the one we have closed. We closed the Bed Bath & Beyond at actually 56%. And now this is a quite good picture of trend following, how it often works. Of course, it is nice in these periods where everything goes in the right direction. But trend following, at least in my book, should be in a way where we close some big winners, 56%, and then we have a string of small losers because we are cutting our losses very quickly. 5%, 11%, 7%, 6%, 0.7%. Then we have a 6% profit here, And this was just when the market went straight down. We had a 23 and a 15%. These are on the larger side, but also stocks that could easily go up 50%. So these are the more volatile stocks. I'm not working with different position sizing for each stock here. I would normally do that. So the more volatile a stock is, the smaller position I would take. But this is simply to test some strategies just to see, does it make sense? So right now we are still in a lot of good positions here. 33, 30%, 17th, 23, 62, and so on. A lot of winning positions down here. But again, when the market starts to drop, these will also be significantly smaller, these gains here, because we never get out exactly at the top. And that is how it is. Let's go through the portfolio so you can see what kind of stocks are in there right now. Now, for the strategy, I have mentioned it a couple of times, also mentioned a video how I find these candidates here. But basically, I look for some trending candidates. I have a few trending parameters. Then I want to see the price be above an uptrending 20 SMA here, the black line, bouncing on that, showing some good buying strength. I'm looking a bit at the RSI to be above 50. And I mentioned all that before. Here, the first stock is Shutterstock. And I actually made a video just about that. When it was around, I think it was around 59, so it must have been here in the middle of October, where I mentioned that I actually entered in my own, this is one of the few positions in this video I have in my own account. I entered Shutterstock here around in the beginning of the 50s here. So right now that has been a very good position up for around 30, 32, 31% here. But I mentioned it last time here, and yes, it has been going up nicely ever since. Shutterstock is also a very good fundamental company, and yeah, you can see the video on the channel. Right now, it is actually making one of my favorite patterns here. Let me see if I can find my drawing tools down here. One of my favorite patterns is the one with the fixed straight top here, and then a rising bottom here. When we break above this, there is some very good upside potential. But right now, it is still in a buy, so we'll just keep it here. Then we have AVAN Medical. As you can see, it was bought down here. I don't mind holding a stock over earnings, but I never buy it straight into the earnings just a day or two before. But if we have a month and a half to the earnings, I have no problem in buying it, and I have no problem in holding it over the earnings. Sometimes I get hit here and get exited. Sometimes I get a huge win here. That is how it is on these small term stocks here. So AVAN Medical, Assure Power. This is actually one where I was a bit, this was where I was very busy, so I simply didn't track it here. I think, to be honest, I would actually have sold it here if I had been staring at my charts. But that is one of these cases where, then again, I might not. And these are these few percentage of subjective decision making I have in my strategies before, because what I have drawn in here is a regression channel. And I do like to see if my stocks find support on the bottom of the regression channel, which happened right here. But if I had been watching it every single day, this portfolio, I think I might have taken an exit here, and then we could also, always enter it again. But it's still in the portfolio, so that is what it is. InMode is also there. We took an entry here on the 28th of September, and it is up very well. This one I would not have sold. It is not really establishing itself under the 20 SMA. I do like to see if I should exit a downwards turn here, up trying to get up above the 20 SMA and then been shooting down. That is one of my favorite exit signals. So when it just dips down and we are not really established under the 50 line or the 20 SMA, I tend to keep it. So still in a nice profit. Tech Target is one of the stocks that also took a big beating here from the top. It went up nicely, and then it went down 15%. And these are some of these very, very volatile stocks. It went down up to the earnings here and then jumped on that. So this is the kind of stocks where you should not have too nervous of a stomach if you don't like these big swings. So there need to be room for that. Le Maitre Vascular, I think it is called here. I bought it here, and it's been pretty much a month just going sideways, and then your earnings spiked it up, and right now we are in a very nice profit here. RSI looking good, so no problem there. Collectors Universe, one that many of you have asked me about. You start mentioning it here and say, is this a sell signal? But it was not. It was under the 20 SMA, but be aware that you don't just use a line like an SMA just for an automated buy and sell signal when it crosses above and below, because in a trending market, of course, it is very nice, but in a sideways market you will be whipsawed to death. You will simply kill your portfolio because it is chopping up and down below and beneath these SMA lines. So don't use it completely automatically. That is not something I can recommend. Alpha Tech Holdings here. Also one we got with a very nice bounce here. It went up above the 20 SMA, was bouncing a bit and had a very good buyer day. We had the RSI above the 50 line, and yeah, well, the rest is history here, upwards. And right now we are also seeing some tendency of higher bottoms and a fixed roof here. So when or if it breaks above this, I think there's room for some very good upside there. Remember, I do not look at the fundamentals here. Many of these stocks, I simply don't know what they do, what they sell, how they make their money. I am only looking at the technical picture here. Donnelley Financial, very good upside here. I think you can start to see the picture breaking above the 20 SMA, down bouncing, and then a good buyer's day here with the RSI in a comfortable zone above the 50 line. Aspen Aerogels, I'm not sure what happened this day, if this is a data error or if it was some sort of fat finger, or I'm not 100% sure what happened here. We are in a little profit here, but a good example as to they are not all just trending to the sky. This is more of a sideways movement, and if this one starts to move down by now and get down to maybe 10 or 10.5 or something like that below the 20 SMA, and we start to see the RSI dip below the 50 line more, then I simply just sell it, maybe in a break even, maybe in a small loss. I don't really care. I'm going for the big winners, and then they will pay for a bunch of small losers. City Trends here. The exact same picture, bouncing on the 20 SMA, a good RSI scenario down here. We could have easily gotten in if I had started my test earlier. We had some also some good entry scenarios down here at 20.2. So what I like with these 98% automatic rules are that I can easily just scroll back and see where would I have bought, where would I have sold. So it makes it a bit easier to get some backtrack results here. Lazy Boys here, that was one of the first stocks I bought after having sold one of my initial stocks. I think Lazy Boys was the first one to, when I sold one of these stocks, the Lazy Boys was the first replacement stock I made here, or I bought here, and that has gone up nicely as well. We have Sykes Enterprises, also one that went up, just dipped down the 20 SMA, went up, and right now it seems like it is holding the 20 SMA, but again, I never try to guess. I never try and sit here and say, nah, I think it will break here, so I better sell now. I simply stick to my rules here, and if I'm very close, if it starts to make a potential sell signal, I usually just draw a regression channel here, and if it is straight at the bottom quarter, 25% of the channel, I usually just give it a couple of percentage of space just to see if it bounces on the bottom of the regression channel. But that is in rare occasions. We have Enpro Industries here, and that is pretty much the same picture here. It just dipped down both below the 20 and the 50 SMA, but if it had gone down here further this day, I think I would just have sold here at around 56 or something like that. But it returned sharply and went straight up, so that was great. Kulike, I'm not sure how to pronounce that, but as you can see, great bounce on an upwards trending 20 SMA, bouncing here on the RSI just on the 50 line. Great profit so far. Then we have Nova Measuring, one of the latest purchases I've made here on the 3rd of November, also up greatly with bounce on the 20 SMA. And we have Intellia Therapeutics also up. As you can see, when we get these bounces and we are in great uptrends, I know it has been, or at least some of the period here has been an okay market, but as I showed you on the S&P 500, it has been going up and down. We could also compare with other markets. We could, instead of the, I can show you that in a second, but instead of the SPY, we can take some of the other market ETFs. That could also make sense. I'll show you that in a second. MicroStrategy, very nice bounce on the 20 SMA, very nice bounce here on the 50 line on the RSI, going straight up, looking nice. Tronax, not sure what they make, but that was one. I was a bit hesitant about this because this one actually went down below the 20 SMA, and I was close on, I had 2 or 3 candidates here, but I chose the Tronax here. I do have, when I screen for this, I made a video a while back about the screening, I also put in a little filter of I want the best candidates on a how much leveraged debt to equity they have, and I also have a little filter of the price to book. So I get I normally get on these smaller micro cap stocks, I get maybe 100 or 200 stocks, and then I add these small fundamental filters here just to make sure it is not a complete train wreck I'm buying. And Tronax was the one that won that comparison, so I took it even though it was just below the 20 SMA for one day and then shot straight up. I bought it here on this day. So Tronax is in the portfolio and looking quite good. Gentherm, also same picture, and then we are back to Shutterstock. Now, just to give you a quick example here, now I mentioned that we could of course compare with different markets. Normally we compare with the S&P 500 because that is what most people do. But there are other ETFs like the MDY here. That is the mid-cap stocks. We can see it has been a bit less affected by this turmoil, but still down, up. And when we take the SLY, which might be the one that was actually best for our comparison, we can still see that it is down, up, but in a bit more of an upwards direction than the SPY. And the reason for that, of course, is that some of the stocks that has really taken a beating for the last weeks here, that is the big tech stocks. And there have been talk about some sector rotation and maybe a rotation from growth stocks to value stocks and so on. I'll not get into that here. I might make a video just about that. But just to say that the SPY, the S&P 500, has been affected largely by the fluctuations in these very big tech stocks. And of course, they are not present in the small cap and the mid cap ETFs in the same way. So you can also always choose which benchmark you should compare with. And right now, it seems like for instance, the small cap is doing a bit better than the S&P 500. However, when I use normal back testing and try to test different strategies, I normally just use the S&P 500 for the ease of it, and so that I use the same benchmark every time. But that is completely up to you. Now, that is about it. A month more have gone by. We are up, as I said, as of the day before yesterday. We were up just around 40%. We had a very good day yesterday with almost 3% up on the entire portfolio. And you can see it is also decent without leverage in 2 months to make above 21%. That is absolutely decent. So I'll keep testing this, and you'll get a video about once per month, just around the 15th. And the reason why it's not the first of the month is simply because I started the test on the 15th of September. So I think I'll just keep doing that. There'll come more tests now. We are setting up our ETF portfolios in a bit more structured way now, and also making a small investment fund just for that. And I will, as soon as we have the real-time tracking of that, I'll also start making 1 or 2 monthly videos about these automated ETF and stock strategies on a bit longer term. So I'll look forward to show the results for you there. Remember to subscribe to the video. And by the way, YouTube have made, I think, a bit of a change in the way they calculate algorithms. I can see that there have been a dip in the number of views as soon as I put my videos out. So if you want to make sure that you actually see the videos I put out when they come, remember to hit that little bell icon down there when you subscribe and like and all that below the video here, because that makes sure that you get a notification. Also, remember to go into the buildingfreedom.dk and add your email to our email list so I can send you all of the new videos, all of the new news that come out here from Building Freedom. That's about it for today. Take care of yourself and your money out there, and I'll talk to you again very soon. Bye for now.